Trading is prohibited. Absence of anticipation. Remain calm. The same day every month for 60 consecutive months. Pure discipline. Today we will determine the precise value of that strategy and how it compares to performing the same operation in the S&P 500. This is the result of replacing timing with consistency in a world that is governed by emotion. The power of consistency, DCA's introduction. DCA, or dollar cost averaging, is the acronym for this approach. It is straightforward. You invest a predetermined sum on a predetermined schedule, regardless of the price. Occasionally, you will purchase at a premium. Occasionally, you will purchase at a reduced price. However, these fluctuations eventually balance out. The objective is not to anticipate the market, but rather to outlast it. Additionally, what is the appeal of DCA? It eliminates emotion from the equation. There is no need for speculation. Gambling is prohibited. It is merely a system that incentivizes forbearance rather than prediction. The test regulations. In order to maintain the integrity and impartiality of this investigation, the following is the procedure. We will purchase $100 worth of Bitcoin on the 25th of each month from October 2020 to September 2025. That is precisely 5 years, or 60 total purchases. The closing price on the 25th will be utilized to maintain consistency as Bitcoin is traded on a daily basis. This brings our total investment to $6,000. Additionally, in order to evaluate its performance, we will implement the identical DCA strategy on the S&P 500, employing the SPYETF. On or before the 25th, the final trading day, $100 per month will be due. 2 markets, the same regulations apply. Complementary field, 2 distinct universes. Journey of Bitcoin from 2020 to 2025. We should commence with Bitcoin. Bitcoin closed at approximately $13,000 on October 25th, 2020. The initial $100 purchased approximately 0.0077 BTC. After a few months, the narrative rapidly escalated. When January 2021 arrived, Bitcoin had surpassed $40,000. Then in November 2021, it reached a record high of roughly $67,000. That was the moment when the global community began to believe that cryptocurrency was unassailable. Overnight, fortunes were generated. However, the collision occurred at an identical pace. Bitcoin's value plummeted below $20,000 by June 2022, a severe 70% decrease. However, there is a catch. The same $100 which previously purchased a fraction of a coin was now purchasing 5 times as much Bitcoin. That is the fundamental principle of DCA. When prices are affordable, you automatically accumulate more, and less when prices are elevated. Bitcoin started to gradually recover in 2023 and 2024. It was trading at approximately $107,000 per coin by the end of 2024. Following 60 months of consistent investment, you would have amassed approximately 0.083 BTC. Approximately $8,900 is the current value. That represents a 48% increase. Despite experiencing 2 catastrophic collapses, global inflation, and one of the most volatile asset classes in history. Not terrible for simply attending on a monthly basis. The S&P 500 backtest. The S&P 500, which serves as the foundation of conventional investing, will now be examined in comparison. Employing the identical $100 per month criterion, you acquire SPY, the exchange-traded fund that corresponds to the S&P 500, on the last trading day prior to the 25th of each month. In October 2020, SPY was trading at approximately $342. The market was still recovering from the pandemic. However, next came the recovery. In 2021, stocks experienced a phenomenal increase. SPY experienced a consistent increase, culminating in a price of $477 in December 2021. Subsequently, inflation became severe in 2022. Stocks experienced a correction, while interest rates increased. SPY returned to $360. However, you continued to purchase month after month as the index gradually regained its momentum. SPY is expected to trade at approximately $664 per share by 2025. A new benchmark. What is the total amount of your investment, which is $6,000? Presently, it is estimated to be worth approximately $8,900. Almost identical to Bitcoin's performance, however, via an entirely distinct route. Two roads, one destination. This is where the story becomes truly captivating. The two investments, one that is highly volatile and the other that is sluggish and steady, ultimately, they arrived at a location that was virtually identical. However, the experience was entirely dissimilar. The line chart of Bitcoin resembled a roller coaster. Dramatic peaks, gut-wrenching declines, moments of exhilaration are succeeded by periods of silence. What is the line of the S&P 500? A staircase that is composed and deliberate, each step that is acquired over time. Your forbearance was put to the test by one, your perseverance was acknowledged by the other. Ultimately, DCA was unconcerned with the asset you selected. It simply rewarded consistency. The human factor, risk, and reward. Thus, what is the general conclusion? It is not solely about numerical values. The subject matter is psychology. In the short term, Bitcoin provided greater rewards, but it also caused more intense emotional distress. The S&P 500 generated returns that were more consistent and gradual, as well as a reduced incidence of heart attacks. Both were successful due to your adherence to the strategy. And that is the true potency of dollar-cost averaging. It does not guarantee immediate wealth. It guarantees tranquility of mind. It is a system that is intended to safeguard you from oneself. Because the investor who panic sells loses more money than any other investor. The investor who waits for the perfect time to purchase is the one who misses the most opportunities. The truth? There is no such thing as the ideal time, but the appropriate habit is what generates wealth. The long game, zooming out. Allow us to expand our perspective. Your initial investment of $6,000 increased to approximately $8,900 over the course of 5 years. That amounts to $2,900 in profit, which represents a total growth of approximately 48%. Imagine that this scenario persisted for 10, 20, or 30 years. Markets experience fluctuations, crashes, and recoveries. However, DCA ensures that you remain stable throughout the entire process. That is why numerous of the world's most affluent investors, from Warren Buffett to Jack Bogle, I recommend it as one of the most dependable long-term strategies currently in existence. It is not spectacular. It does not achieve virality. Nevertheless, it functions. Due to the fact that genuine prosperity is not achieved overnight, it is constructed over time. The actual significance of Bitcoin versus S&P. Therefore, what does this indicate about the future? Bitcoin continues to be a speculative asset, but it is also maturing. Global adoption, institutional money, and exchange-traded funds have initiated the process of restoring order to what was previously anarchy. The global economy's backbone is represented by the S&P 500 companies that facilitate the operation of the globe. However, in this experiment, the performance disparity between the future of money and the Old World Index nearly vanished. That conveys a profound message. Discipline surpasses disruption. Technology undergoes continuous development. Trends are subject to change. However, a consistent investor consistently emerges victorious. Return on emotional investment. The question that the majority of individuals never pose is as follows. What was the total amount of tension that each strategy caused you? Your emotions would have been on fire with Bitcoin, euphoria in 2021, despair in 2022, and incredulity in 2023. You would be required to endure extreme volatility. You would be able to slumber better with the S&P 500. You were aware that history was on your side. This is the reason why DCA is so valuable. It prevents you from experiencing emotional exhaustion. It serves as an alternative to the exhilaration of pursuing highs, with the quiet satisfaction of consistent advancement. Because at the conclusion of 5 years, the numerals may appear identical, however, the voyage is what shapes your identity as an investor. The key takeaway: manage what you can. The following is a straightforward instruction. The market is beyond your control. Inflation is beyond your capacity to regulate. Even the timing of bull runs or collisions is beyond your control. However, you have the ability to manage your timetable. You have the ability to regulate your discipline. You have the option to attend each month without error. That is the essence of dollar cost averaging. It is not a trading strategy, it is a state of consciousness. Additionally, upon its adoption, you cease to react and commence the construction process. Due to the genuine compounding potential, it is not solely in your financial interests, it is based on your behaviors. Therefore, what would have been the outcome if you had invested $100 each month for the previous 5 years? It was unnecessary for you to time the market. You did not require chance. You simply required perseverance. And that perseverance transformed $6,000 into nearly $9,000 by means of crashes, hype, and terror. That is the subtle influence of DCA. It is indifferent to commotion. It is solely concerned with your attendance. This document is known as the DCA Blueprint, where data is transformed into clarity and discipline is transformed into wealth. If you wish to observe the precise manner in which consistent investing accumulates over time, follow along by clicking subscribe. Additionally, if you are prepared to advance in your own voyage, please observe our forthcoming video. What if you had DCA'd into the S&P 500 for the past decade? The blueprint for prosperity is not discovered through luck. It is constructed through perseverance.